This is E for MarketWizards.com and eMiniWizard.com. And it's Sunday evening, the 21st of October. And just wanted to do a quickie. First, a reminder of our disclosures. And there are obviously no guarantees in this business. Make sure you are using risk capital that you can afford to lose. Better yet, get an education first before you throw away your hard-earned money. A reminder, got a special presentation coming up November 8th at 4:15, and this is in conjunction with Ninja Trader. Hope to see some of you there. There's a button right there. Make sure you register in advance if you'd like to take advantage of this opportunity. Learn a little bit more about what we do and the way we look at the market. And additionally, some of you may want to consider taking a look at our trading room. That session begins tomorrow, October 22nd, and we'll start about 9:15 in the morning. So usually I'm in there a little bit earlier, but certainly by then we'll be up and going. So click the button if you have interest and just follow the prompts. Let's take a look at the E-mini S&P. Notice a comment by Tony from TraderSmarts the other day. He had asked a question. What do you think? Are we going to 28.15 first, or are we going to 27.15? And that's a nice question. Obviously, it's cocktail party talk, and it's fun for us to analyze and throw out a poll. And I respect Tony and what he tries to do to get traders to engage and come up with ideas. So for the sake of argument, let's take a look and see if we can add some structure to this and see if we can come up with any conclusions. And the correct answer, of course, is obviously what can we take out of those swings on the way from one of those areas to another and beyond, obviously. But first things first, we know it's boxed inside that range, so let's deal with that range first. Our mind needs to see structure. We need to see like stairs when we walk into a building. We want to know that they're somewhat uniform so we don't trip. And markets are pretty much the same way, especially with bots these days. So the first thing that I would do would be to take a look at the structure, see if anything jumps out at me. Double tops, for example. We know that 28.12.50 is a major pivot in our system, so that was one of the first things that clued me in that better be paid down here by 27.12.50, 100 points away. So let's just use his numbers and try to come up with some ideas. One of the things that I had told our traders was we'd had a 235-point drawdown, and to expect that we could bounce at least 100 to 120, 140 points easily. And we've already had a substantial bounce off the floor based on the laws of proportion. Let's take a look at a little more structure. Now, we're going to look at a chart that I put together that using the E-widget. Label the bottom, label the top in that range, and then put some steps into it, equidistant steps, and I can set those for any measure I want, but for the sake of argument, let's use his numbers. So this would tell us, based on the laws of proportion, that one of the things we'd want to be aware of is obviously the middle. For futures traders, that's one of the things we look for. So this line right in the middle here at 65 is obviously 50 points away, equidistant to either of those targets. So we're going to use that idea to help us determine whether that threshold is supporting us or is holding us as resistance. And on Friday, one of the things that we had talked about in our latest blog was we had thought that the 70 to 65 area would be very important, and to expect that anytime we got into it, make sure we got paid, because this would tend to be supportive. We also noted this 2802, 2806 area as an important resistance zone from the other day. And make sure you're paid coming into, well, first things first, we thought 88 92s, 95s, make sure you're paid, and above that, really good fortune. And you can see how that zone has held as resistance and brought us back to the middle. On the other side, we can look and see the tails down here under this 27, 28 area. And then again, the other day we held these 32s and pushed up. So we know we're trading the core. We know we're trading the middle in this range. And first things first, you've got to resolve these ranges first before you look to the next step, and then obviously to the next step. So this is one of the tools that we use to help us evaluate risk and reward. It's not just about do we get to the 28 or the 27.15, but where does risk and reward come in? That's a very important idea. When are we available to trade? It could be we have a move that we really like, but we're sleeping through it. That happens a lot, unfortunately, but just the way it is. How about intermediate rotations? What type of small rotations exist within the larger ones? Because we know it usually won't go just a straight line. These are anomalies when we get something that that runs this hard, this fast, and then we get a pullback and then another pullback, and we come back and retest these breakout areas. So that's part of trading, is learning to understand that we're going to get some pushes in one direction, and then we're going to get a reaction to it. And that's the important part of trading, is understanding that we will get these ebbs and flows. All right, this is using the same basic idea, but taking it and putting it to our recent swing range. And this will give us a picture a little bit tighter in terms of the actual true range that we're dealing with right now. And obviously the low and the high need to be broken before we worry about anything outside that. So this type of analysis allows us to plot our middle, this 68.5, and this was the reason why the other day we thought that coming into this 70 to 65 was our fighting zone, taking into account this proportion. So using this idea, the 10.25 back here was our resistance. The other day when we had said, obviously there was a gap that did not get filled, and we thought that that 08 area might be a reasonable place to think about any bounces holding, coming back in just based on the laws of proportion. Got a very nice push, came back down in, and at that point we said, all right, let's think of 50.52 as our support area, and then maybe we can get a bounce from there, which we obviously did, came back up and retest that breakdown back here at 2800. This would certainly be breakdown the way we would look at it right there. Here's your double that breaks, comes back up, and then third time through, and had pretty nice sell-off here. So next targets, we're at 50 right now. We know that these lows back in here are going to be very, very important overnight. So you're going to keep an eye on that. And again, part of it is, can you take pieces of the swings as the market moves back and forth? So a very important support area obviously is going to be this 40 and a half. And then below that, the 26s. And below that, the next area would be getting close to that 15 to 12 area. So step by step, obviously we're going to look at this high as an important resistance from Friday. And then secondly, we had said make sure you are paid longs by 78.5. If you go back and look at our post, you'll see that, and we have reasons for that. We said make sure you are paid there, and then we got the sell into the close, and here we are. So step by step, if you want to do the analysis, then we're really talking about this 68 area. Should be very helpful in understanding whether or not we're going to get back up and retest that 12 area, 28.12 before 27.12. And there's probably a lot of horse trading in between before we even get that type of rotation. If we take our measure from these 45.25 as our next known support back to the high, then we get the middle back here, 85. So 85 is obviously going to be a very important location in the next rotations. And now if we are looking obviously at a swing from the last known high to this known support down here. We're going to look at the middle is this 73 area. So obviously the 73 to 75, very important right now as resistance, attempting to get down here and test these 45s. And we can do this over and over, just adjusting our levels and saying, okay, where is the current range? What makes the most sense in terms of finding our next known support areas and our known resistance zones. So for now, obviously, this 45 to 50 is going to be very important as a support zone. And obviously the tail end from Friday, that 2800, but tightening it up, we know that the market turned here at the 78, so let's call it 80. So for now, we've got 80 and 45 to 50 that we need to resolve before we even think about these other numbers like 2812 or 2815 and 2715. So step by step, we need to keep an eye on these known clear support areas from the past, and the same thing for resistance zones, and trade the range as we can and try to take something out of it. Nobody knows where it's going, truth be told. We make educated guesses. So going back to the original premise, 2715 or 815, we know that this is going to be a very important zone right here in the middle, the 65 area plus or minus. And for those people who really like to buy contras, so the trend has been up all year, but lately we've had a correction. And pullbacks are contras to the bigger trend right now. No one knows when that will end, but when it does, it could end with a bang. We've got a lot of emails coming in from all the doom and gloomers. But in the meantime, let's just trade it. And if we get ourselves into a situation where we're underwater, get out. That's all. Go to the sidelines, take your stop loss, and then go back and try to reanalyze, figure out what's up. Here's a 30-minute chart that we were looking at. Thought that certainly above the pink line, this was clearly coming into a resistance zone and expected to pull back when it can't hold the green and the blue and the red lines and dips under as it did the end of the day. Poor close. Then it suggests that maybe we're in an umbrella trade and we'll be heading south side. And this is why we thought at the end of the day Friday, it was kind of do or die time for the longs. They had to get it back up above that 80 to 85 to really show a little bit of strength. And they couldn't do that. So all I can say is we use a number of different charts, and this is one of them that we would use to help analyze where we're heading and where potential support areas are. You can see these traders have been knocked out. Great trade here, but guess what? Back under, held, bounce. Now third time through it. So next support, got to look down here, step by step. So bottom line, one of the things we look to do is analyze relationships and prior support, prior resistance, and say, where are we? By looking at several different measures, it gives us a truer picture of potential support and resistance zones and where potentially the next trades may stall and reverse and head back in other directions. So for now, one of the things we're looking at, downside first, downside second target, downside third target, and obviously this last target down here. And if we hold any of these and start to get above here, then obviously first target here, second target here, third target here, and then obviously the completion target. Anthony Crudele had made a nice post that I noticed, and he said he wanted to see how markets react to his indicators and economic data before he considers a trade. He doesn't anticipate a trade will work based on it. In working in a similar situation in the past, if it doesn't work exactly, that's okay. He feels it's coincidental if it does. So using that idea, I think we have to agree that he's right to a certain extent, in that history does repeat, but but really not exactly. So we have to use common sense. But we do know that there will be some opportunities for completion targets based on the normal true ranges that we get. So the point of what we're trying to do is say normally, what is a normal day? And that's changed lately. Obviously, volatility has picked up. Instead of reasonable 20 to 30 point ranges, we're getting 50 and 70 point ranges. So, you can't let a trade run against you. That's just suicidal. But we can understand where potential completion targets may be based on the laws of proportion. And as we approach some of these areas, then a trader that's in a trade is going to look to make sure he gets paid something for taking risk. And that's the point of super analysis. You just have to do the homework, and nobody can do it for you. You have to see it. You have to feel it, just like standing over a 10-foot putt. Nobody can swing the club for you. You have to feel it and you have to swing it. And then you have to be ready to take the next one if you're 10 feet away and you wind up 7 feet away after the first putt. So all I can say is this is the type of analysis that we do all the time, trying to understand where the rotations are going to end and where our targets are. And nobody's perfect. Those of you who are learning the game, you should find a mentor that you resonate with and try to learn their game, and then add your own twist to it as you feel comfortable. So, Tony, thanks for posing such a great question. And again, the bottom line is, what can we take out of these swings as the market moves? That's a much more important question for us to ask, in my opinion. Thanks, Tony, and thanks everybody for listening.